Welcome to the CFD Weekly overview of the global financial markets. The euro weakened against the dollar on disappointing news from Mario Draghi at the ECB press conference, suggesting that a disorderly Brexit might have some negative ramifications for the eurozone as well. Chancellor Angela Merkel also announced on Sunday that she would not seek re-election as party chair, and that her fourth term as Chancellor would be her last. The British pound fell last week, hitting a two-month low against the dollar, as Brexit talks remain at an impasse, and the divided Conservative government attempts to rally around a common negotiating position. The Japanese yen exhibited choppy trade last week as risk aversion and temporary optimism alternated, as global stocks showed great volatility. Overall, the US dollar strengthened last week, boosted by preliminary US third quarter GDP figures on Friday, which were 0.2% higher than expected, and as stock market turmoil continued to grip global markets. Disappointing earnings results from Amazon and Alphabet sent shockwaves across equity markets. US stock indices marked their fifth straight week of losses. Markets were again roiled by a report in Bloomberg that the US is preparing to impose tariffs on the remaining $257 billion worth of dollars of Chinese imports, if talks in November between Trump and Chinese leader Xi Jinping do not go well. The Turkish lira further strengthened against the dollar last week, and this week markets will be looking to the Turkish Central Bank inflation report and its summary of its October monetary policy meeting to be released on Wednesday. Gold prices continued growing last week. Geopolitical factors, mounting fears over the prospect of a trade war between the US and China, and risk-off sentiment boosted demand for the precious metal. On the other hand, a strengthening dollar, widely considered as a safe haven asset in recent times, is weighing on gold prices as of Monday. Oil prices slid further last week. A shortage of supply ahead of US sanctions on Iran, due to begin on November the 4th, turned into concern of a possible oversupply, as inventories are rising in many parts of the world. And big producers such as Saudi Arabia and Russia have pledged to produce as much as possible to fill any shortfall left by Iran. You've been watching the CFD Weekly overview of the global financial markets.